The Bank of Korea has decided to keep its key interest rate steady for the 7th consecutive time at 3.5%. But a rate cut seems unlikely in the near future amid the slower-than-expected pace of easing of inflation. Our Shin Ha-young has the details.
South Korea's central bank has again kept its key interest rate unchanged at 3.5% as widely expected. The decision was announced on Thursday following a Monetary Policy Committee meeting.
Despite the higher-than-expected inflation growth, a slowdown is anticipated. Considering the impact of the prolonged monetary tightening of the US Fed and rising external uncertainty, including geopolitical risks, we have decided to keep a tightened monetary policy. The Board of Governors voted unanimously to maintain the current tightening stance.
For a 7th straight meeting, the Bank of Korea has decided to freeze the rate. The base rate has been held at 3.5% since February, following 10 consecutive rate hikes to tame inflation beginning in August 2021. Analysts say the central bank sees no need to raise a key interest rate solely to address soaring household debt, as it could further weaken consumer spending and investment. Also, despite concerns over the economic impact of the Israel-Hamas war, global oil prices are on a downturn due to an anticipated decrease in demand amid a global economic slowdown. Stabilizing the exchange rate between the Korean won and the US dollar is also thought to be a factor that contributed to the BOK's latest decision. Meanwhile, the BOK on Thursday maintained its economic growth outlook for this year at 1.4%, while it slashed the outlook for next year by 0.1 of a percentage point to 2.1% from the previous projection in August. Consumer price growth is expected to be at 3.6% this year, up from its previous forecast of 3.5%. The BOK also raised the figure for next year to 2.6% from 2.4%. Inflation slowed during the first half of this year, but it rebounded in August, and the increase expanded consecutively until last month to 3.8%, the highest in 7 months due to higher oil costs and rising prices for some agricultural goods. Meanwhile, experts note that it is challenging for the BOK to lower the benchmark interest rate ahead of the US. This is due to the steady rise in Korea's household loans since April of this year. Also, the interest rate gap with the US has already widened to a historical level of 2 percentage points, increasing the possibility of foreign capital outflows and depreciation of the Korean currency. Shin Ha-young, Arirang News.